Equities markets in China were hit, opened after the lunar year, of course, after a big break with nearly a 10% decline, hit obviously by further concerns over the spread of the coronavirus. This is why I wanted to start today with the Chinese 50. We've had this sharp decline over here that seems to be, to me at least, a corrective continuation to the downside. Is going to end this triple zigzag pattern down around the intersection level, which is probably below the 11,000 psychological level. Now, I see this as a corrective pattern because we've failed to cross above that level actually once and then twice. So we have pretty much two attempts here that they seem pretty weak. Now, with this sharp decline, we're seeing prices moving down after also realizing that we've had a very good signal to the downside provided by the MACD. I just want to go on the 4 hours just to have a clear picture. We've had this ABC move completing Y wave, okay, with an A, B, and a C, which seems to be an ending triangle, okay, and then we broke down. So we've had waves 1, 2, 3, potentially 4 is going to be some sort of triangle to the downside, and then 5, or since this is very sharp as for wave 3, right, that could be wave 4, and then wave 5, you know, just range a little bit over here around this area, and then we should get a small correction and a continuation to the downside to complete wave Z. We'll have to wait now and see how this will pan out, because don't forget the virus has a around 14 days incubation period. So with the numbers of affected people increasing, this is also spilling over to the global markets. Now jumping on the S&P, we talked about this pattern last week actually. We're seeing this still impulsive move 1, 2, 3, 4, and 5 up, right? In the minor degree, we've had waves 1, 2, 3, and 4 is going to complete now. Then a move to the upside for minor 5 is going to complete also in the immediate wave 3. We should then again see another correction to the downside. And then the last move to the upside, which I'm expecting to be probably in Q2 2020, right? Now, closer to this current structure, there is two different scenarios here. One, we have an A, B, and a C that actually ended below that level. So probably start looking for prices to move up, of course, provided that we have a very nice signal on the upside on the MACD. Or the other scenario would be, and this is of course a flat, right? Or the other scenario would be that we've had waves A. B is not done yet, which means that we're going to have an ABC, 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 ABC. This is going to be an open triangle, right? And then from down here, we're going to move to the upside. I'm looking at this, that the momentum has actually turned positive from the zero line, right? So it's either going to be an ABC or 1, 2, 3, 4, and 5. Now, last I want to go also on the US index. Now, the US index has been falling since the Fed's announcement last week. Economic data don't seem to do much actually in the current markets. It's affected very much by the Chinese outbreak. We really want to look now at economic data with a different view, because nothing is really moving the markets apart the fear of further spreads of the virus. Now, this one has actually been moving exactly as we expected. Last week, I talked about this potentially correcting up to complete wave 2, anywhere between the 78, because we're around above the 61 actually last week, we're around here. So we now have broken, I see this as a triple zigzag, right? Ended at between the 78 and 88 Fibonacci retracement over here of this move, obviously. Now, with this 1, 2, 3, 4, and 5 done, and this 1, 2 done, now we are turning again bearish with an impulsive move, right? Now, this impulsive move can be A, B, and C, and then we're moving up. It's still very likely. Or the other scenario, of course, is that we are going exactly as we expected, and I'm still expecting, to be honest. Wave 1 is here, 2 is here, we're going for wave 3. So I would be looking in the short term, I would be looking to see breaks of previous highs, right? So the first one will be this one. Since we broke that level, I'm looking at that one next, which is the 97.10, 97 or so. But more importantly, what I want to pay attention to, right, is this level over here, okay? You'll be able to notice that we've had, if we connect these tops, actually, we get the trend line in the section down here, which is exactly where price is bounced, right? So we've got 1, 2, 3, 4, and 5 extended, right? Or it could be 1, 2, then this is 1, 2, 3, 4, and 5, which means that this is 3, then 4 and 5. I mean, there's like multiple scenarios that we can consider, but I see more downside on this one, since also we get that signal on the MACD as well. What I want to pay attention now, as I was saying before, is this level, right? We see a bounce, but this could be only temporary. So if we break below that level, and then we want to hold above this, right? If we hold above, then most likely we're going to get to the previous one, and could be either for wave 3 or some sort of more complex pattern that is either going to turn out being, you know, impulsive to the upside or to the downside. However, at the moment, I'm looking in the short term at least for prices to move lower.